Hey folks, we're going to talk about depreciation terms and definitions today. So let's start with the definition of depreciation. It is the allocation of the cost of a long-term asset over its useful life. So what's happened here is we have purchased an asset that we're going to use in our business, and it's going to last for more than 1 year. So what we want to do is every year that we use it, we want to allocate a portion of the cost of that asset to expense, to depreciation expense, and then match it against the revenue that that asset helped produce that year. Okay, so depreciation is a cost allocation method. The depreciable cost is something that we're going to want to know because that is the total cost of the asset minus its salvage value. Another way to look at depreciable cost is it is the maximum amount of the cost that can be depreciated. So just because we paid, say, $110,000 for the asset doesn't mean we can depreciate the whole $110,000. Another way to look at depreciable cost is it equals the total depreciation expense for the asset. Okay, so the amount we can depreciate is the depreciable cost, and that's the cost of the asset minus the salvage value. Okay, so let's see, what is salvage value? Salvage value is the amount of money that a company estimates it can sell the fully used asset for at the end of its useful life. So you finish with it, it doesn't work as well anymore, so you put it out on eBay or wherever and you sell it for as much as you can get for it, and that would be what you think the salvage value will be. Okay, so once you have determined the depreciable cost, you've allocated some of the cost to expense, now you're ready to determine what the book value is. The book value is the cost of the asset minus accumulated depreciation for that same asset. So it may also, book value may also be referred to as net book value. And the book value is important when we come down here to the balance sheet presentation, and the way we compute it is we take the asset at its cost minus the accumulated depreciation on it at the end of each year, and that's going to give us our book value. FASB, or generally accepted accounting principles, tell us that we have to show the asset's cost on the face of the financial statements and the accumulated depreciation and the net book value. So we have to have all three of those numbers to put on the face of our balance sheet. Okay, so let me go back and define the term accumulated depreciation. It is the total depreciation expense taken on a long-term asset since the beginning of its useful life. So it's every single penny that's been taken at the end of this particular year, whatever year it happens to be, and that is subtracted from the cost to come up with the book value. Okay, so there's the terms you need to know. Make sure you understand how each one fits together with another one, and we'll come back and do some methods. Thank you. Bye.